It's increasingly looking like a bit of a top in the market is confirmed now. Might be a bit too early to say that, but absolute chaos looks like it is unfolding. Let's look at the S&P straight away. Now, we've come back down. This was the high. We've hit this horizontal again, but this time a lower close. We really are closing on the ascending. I don't know if it's incredibly accurate, my ascending, but you get the picture. Tomorrow it's confirmed. I mean, you could just tweak it a little bit like that and say it's just on it. But let's be honest, we're probably going to have more downside tomorrow. We'll probably close below 440. That's a bit of a guess. Yeah, I think it'll happen. And, below 440 is a psychological number. By then, I don't care how you've tweaked this ascending, we've closed below it. And you should be on your way to this horizontal 430-ish to match the Nasdaq a little bit more. I think the Nasdaq is going to close obviously below this 364 low it put in the last 2 days and essentially go back down to this horizontal 358-ish. I've said this before. And I think we're going to hit this little neckline, create a right shoulder, and eventually close below and flush the whole thing. So the S&P, the equivalent would be coming back down here, creating a small bounce, and then boom, flush. But, they have slightly different charts now. The Nasdaq is more pronounced on the way down. Makes sense. It was more pronounced on the way up. But you can see how it's looking more and more bearish. They're both down over 1%. We haven't had moves down like this in a while. I think it's at least 2 weeks that are red. Let's look at this real quick. Actually, the weekly candles of the S&P. Now obviously the week is young, but that's the first time we've had 2 red weeks back to back, and this third one looks like we're flushing. The Nasdaq, same thing. All right, let's go back to the daily. Check out the Dow. Look at that. First time we've closed below this little area, which held for a while, 35,000. Now we're in the 34,000. Ugly close. I said we go back down here. I still think that's the case. We may even overshoot it and go here, 34,400-ish. That's definitely possible. But and then a small bounce, which will probably coincide with the S&P and the Nasdaq making their right shoulder, and then boom, we go back down and hit this ascending. That's what I think is going to happen. The Russell, look at that, also red close, low of day, worst close since this decline started. And I think, and I've said it, I think we're going to hit this ascending thereabouts. Let's look at the banks because they are really part of the Russell. Look, the XLF, the senior banks, that was holding it nicely. And then today, obviously, is the outlier. Look at that, it really stands out. Is this support? Maybe on on a different day it would be, but not really. Very weak support, maybe intraday, but look, we closed there. I think the markets will continue going down tomorrow. I think we'll continue going down. It's pretty hard to tell for the XLF where support may be. I mean, here kind of, but we're going to keep going down straight away tomorrow. So really for me, it'd be around 33.50, but it's not very strong. It's not very obvious, but it should be around this zone. But you know what? If you can't tell, check the KBE. There it's a lot more obvious. It'll be 38-ish. I said we would flush this horizontal straight away. We did that. Didn't really care. We opened actually at the horizontal and closed there. So I think we're going to go to 38 on the KBE. If we overshoot, we'll have this ascending support. And when KBE starts to find support around here, and by the way, the KRE will be the same thing. When the KRE finds support around, let's say the ascending there, 44, just under 44, that's probably when the XLF will bounce, wherever it'll be by then. The point is that the banks that were kind of strong, I mean, the whole time they've been leading the way down. We had the banking collapse, but, late pop, the Dow and the Russell had a late pop compared to the S&P and the Nasdaq, but now they are forced to give it back. And I think they're just going to accelerate on the downside. And who knows, maybe they will lead all the markets lower like they did last time. And I think interest rates going up, banking collapse, I think that's all on the agenda. I mean, I think the bear market is back on. We've had this crazy rally. Everyone thought it was forever. I mean, they did print a lot of money for these banks. You had this AI craze. You also have this return to the norm sort of mentality during a bear market where the bear market rally rips everyone's face off. And it was so unprecedented. People thought that it was over. Most people, I think it's back on. I mean, I did really think it would roll over before it did, but I think we're back on here. So yeah, banks lower, markets lower. There's your next support. I think it will bounce a little bit and then keep flushing. So we're starting to see more pronounced signs of that. Let's look at interest rates, because for me, interest rates are still the most important. Today wasn't the craziest day, unchanged for the 1 year, just sideways action. You know, early on, it was looking pretty strong. The 2 year, all, ventured above 5%, very significant stuff, but closed below it. Kind of a sideways day. It's not ready to close above 5% just yet, but it's had a decent run. Look at these candles. 5 year did close green, did venture to new highs, 4.45, at least compared to here. I think a close above 4.4 would be pretty significant for the 5 year. It'll be like the 2 year above 4.5. The 10 year, look at that. Even though it wasn't the craziest day for yields, we did have some significant moves. The 10 year, the most important one after the 2 year, ventured to new highs. Look at this 4.2. We popped our head above. We closed above 4.2 again. I think we did yesterday. It doesn't matter. We did today. It's still up. Look at the longer end of the yield curve. 30 year did the same thing. Closed green, popped its head above this 4.36-ish zone, going all the way back down to here. The next high after that is basically this little high here. So to me, it might have been sideways, not the strongest day, but it's up. It's still up. Let's look at it. Actually, let me look at the other yields. Same thing for Europe. Japan's a bit of a special case, but that'll be the same thing. Britain, Italy starting to break out of this descending. It's little things like this that just change everything. Like Italy starts to close above this, which we'll probably do tomorrow. Bam, EU yields go up, sends the US yields up. They all pull on each other. So look at the French, made a new high. Wow. The German, that's pretty much the same as the EU. It's just 1 or 2 days away. I said this already. Yields are going up, even on a muted day like today. Overall, it was up. DXY, look at this. It's still not. Yesterday, we hit this horizontal resistance, closed, we sort of lost half the gains, but still it was a green day, very significant continuation from this close here that was bullish. Today, it was kind of the opposite. Like we back tested the support, prior resistance. It worked, closed near high of day. Bit of a hammer. Suggests you want to test this again. We're really middle of this mini channel, and I think we want to test the high again, 103.5. Watch out if we close above that. It's just going to be more of the same. Let's look at the FXs that make up the DXY. Euro US dollar closed at low of day. So that attempted rally from this failed. Probably suggests you want to go back down and test this sort of 108, 108.3. It's not the most bullish or bearish. It's just sort of more sideways, slight bearish connotation to that. US Japanese yen, this is still very bullish. That closed yesterday there, and today, even though the DXY wasn't up too much, still sideways consolidation, probably wants to move up to 149, 150 still. Pound, this is just sideways action, nothing too ridiculous here. Not very bullish because it gave up most of its gains, but it didn't even go red. So that's just sideways. Canadian dollar, okay, now it's not really making up too much of the DXY, but look at that. Again, low of day close. It lost the ascending yesterday, roughly, and now it's more of the same. Pretty much wants to go low it all the way down here, but it doesn't make up too much of the DXY. But there are some other currencies that are losing ground to the dollar. I mean, when they say the dollar is the best of the worst or whatever, it's stuff like this. Look at the dollar against the Chinese yuan. They're printing, they're freaking out with their economy not doing well, so that helps the dollar somewhat, right? We're testing this 7.35-ish resistance. Look at I forget the Turkish lira is just a different story. Oh my God. I remember when Jesus Christ, that's disgusting. The ruble though, right? The ruble's going below 100 against the dollar. Now, I think it's kind of bottomed. I think the Russian central bank raised rates by quite a lot, 10, 18% or something, double figures. So, but it's just to say, it's not just the main currencies that make up the DXY, but all of them, against the dollar. It's really, so this huge rally, it could continue. And again, just to summarize, I think we will start to test 103.4 tomorrow. And it's critical that we don't breach it. Because if we do, okay, you still have not very strong resistance just above, in my opinion, this long-term stuff. But, if it's closing above this, it probably suggests there's a lot of power. There are forces that want to test just above, and they think they can break it. So let's see, this entire range should be strong resistance, starting with this one at 3.5, which is why I made a big bullseye. Dollar is very important. And we could have this market meltdown, yields and dollar up, everything else down. You know, VIX dollar yields up, everything else down. It could be something like that turns out here. But so far, we've got the dollar yields up, markets down. Okay, let's look at commodities that should suffer from the dollar going up and yields. And the markets, it's 50-50, but we'll look at that. Copper, when the dollar's up and the market's down, copper's down. That's exactly what happened today. Look at this close below this horizontal. I said if that continues, you can expect copper to go down here, 3.56-ish. We're on our way. That's a close below the horizontal. So if everything continues as it did today, we should go back down to there. That's just the way it is for copper. It's pretty sensitive. Natural gas. Now, this shouldn't care about the markets or the dollar or yields. I'm not too sure actually why. I know there was some strike in, oh my God, I forgot the news, Australia or something, some natural. It's specific to natural gas supply and demand, ultimately. I don't know if that's why it came down so much, but that's a pretty bearish engulfing candle. Unfortunately, the resistance of this long-term descending is still, I mean, I could tweak it just to make it fit conveniently. See there, I did it. And actually that starts to make more sense. Maybe that is the candle, the trend line I should have had. But yeah, still not enough. You really want that close above 305 to make sure you've cleared this descending, but so far the resistance is still too strong. So let's see what happens. I really hope we don't go all the way back down to this support zone, this 2.5, but this suggests it wants to go back down a bit more. Maybe we retest this descending. I don't know. This horizontal at this point is now invalid. Let's see what happens, but that was not the best day for natural gas, down pretty much 5%. Oil, now I said this ascending would be lost, and today is the day. Now it's looking like it wants to come back down. First stop here, 79, maybe mini bounce, but I think it needs a healthy retest of 74. To be honest, if the markets go down, oil should go down. I think the markets will go down. I do think oil will come lower, mid-70s. If the dollar goes up, definitely will contribute to that. If the dollar goes down, just reverses all of a sudden, then I'm not sure. It might still come down with the markets, because remember, it's regardless of the markets, it's had a crazy run. Forget everything, forget news, forget other influences. This chart suggests it can't keep up with this ascending, you know, this steep advance. It maybe needs to just relax and have a healthy retracement, come back up. So I'm looking at 79 after that, sort of 74. It probably finds support just above 74, because that's, I think people will be very bullish and might be buying this dip a bit more aggressively. But I think oil should come lower, and it makes sense for me. 82, 83 was sell. Look at all this, and there you go. All right, uranium down with the markets. I think uranium just generally is very, very strong. It wants to go up. It will go up. It's just when the markets go down. Today, a minus 1% day is pretty strong sell day in the markets. And I do think we're going to have a minus 2, 3, 4% day coming. Long overdue, but the point is, when it's minus 1%, that's enough for uranium to have a big red day. And that's what happened today. I think it's just the breakout is on hold. Ultimately, it's coming. You can see uranium is very strong. The thesis is very strong. You know, long-term strategically, uranium is the only energy source that can really deal with what we need going forward. Forget solar, wind, and all this other stuff, even coal. You know, uranium is the only way forward, in my opinion, and this chart is very, very bullish. So we could be delayed because of a market meltdown, but ultimately this is a buy the dip sector. So, but today down. Let's see what happens tomorrow. I think the markets will come down more, and I think uranium you could get cheap. Thank God, because I don't own any uranium, and I feel stupid saying that, especially down here. I knew it too, but I still didn't buy. That's just my greed. So uranium bullish long term, but short term, because I think the markets are going down, I'm also bearish uranium. Gold and silver. So another down day, makes sense. It wasn't down too much. You can still see, normally I make a video a little later and these are already reset, but you can see how much they were down today, minus 0.3%. Testing 1900. Look at that little mini flush of 1900 back to 1895. Beautiful. This is what I thought would happen. I thought we'd have a mini flush of 1900, come back up and close above, although the day isn't over, but close above 1900. Silver, very strong down here. Makes sense. It should be very strong there. Look at this ascending. Also something I thought. To that flushed with gold. So to be honest, the metals are outperforming the miners, which has not been the case for several trading days, like 7, 8, 9 trading days. It's good to see the metals holding around 1900. Definitely gold is a support, a 1900 big round number, also price support. So it's good to see. It's just, again, the dollar yields, they look like they're going to test highs again. And if they break out, and they could run quite a bit more. Yields could start making new highs and just rising uncontrollably and crushing markets. But I'm sorry, gold, as much as I love it, I have to be honest, you've seen gold come down with the markets aggressively. You've seen the miners come down with the markets, sometimes even more than the markets, even if they've been destroyed more than the market. So miners sometimes are just the first to get destroyed, no matter how much they've already been destroyed. And you have to be, you have to admit that that's a possibility. It could continue. The dollar, if it starts to squeeze at that 104, 103.5, 104, I mean, yeah, it's possible that gold goes up with the dollar, the market melts down and the banks start to melt down there. And we saw that over here, this huge rise. That was beautiful. But, the opposite can happen, because there, the dollar wasn't going up. And right now it is. So you've got a picture in the yields, the dollar, and the markets. Those are the three things I'm watching very, very closely. For now, we've held this zone. If we start to close above this descending, that'll be great. That's technically very sound, and we should start to bounce. But again, what are the markets doing today? Gold and silver, unchanged, in my opinion. This is healthy, flushing under 1900, closing above. Let's look at the metals. Sorry, the miners. Look at the miners compared to the metals. Over here, they were outperforming. It was sideways. It was good. And we had that day yesterday where we really flushed and closed above. That was very, very strong and bullish. And today it was the opposite. It was just absolute flush. It was, I think they just finally gave in and started to say, all right, let's make up for how much gold's come down the last couple of days. But this is a severe flush. I mean, 2.5% is notable stuff. We're in the gap fill. Have we filled the gap? Yeah, we have. You could say it didn't completely, but 28 is really the low. But whatever. Difference between 28 and 28.2 is nothing. So tomorrow, what would be really good is just we touch that 28 and close green, and then we just violently come back up, and it was just 1 or 2 days down here and gap fill done, and everything goes up. Obviously, it depends on the dollar and yields in the market. But today, we basically followed the markets down. It was the markets were down, so the miners are down. Metals were down a little bit. Okay, miners are down a lot. But I did expect the miners to do a bit better or not do this bad. GDXJ, same thing. Now, this makes a lot of sense. GDXJ has touched its low here. And okay, GDXJ goes down 2.5%. You can't have the GDX not moving. So that's probably why GDX said, okay, I'll just fill my gap. So this is a low I bought today. I mean, I know that the dollar can go higher. Obviously, I keep saying it. I know yields can go higher. I know the market, I think the market's going to go lower. And I know that can bring the miners down. But I just said, you know what? I just zoomed out. I said, this is a zone that you should be buying. Long-term thesis is totally unchanged. I still think gold's going to go way past 2000. Silver's going to go straight to 30, then 50. That's what I believe long-term. So I nibbled on the seniors, the most defensive move possible. Little Agnico Eagle, little Newmont, little Barrick, little Pan American Silver, and a tiny bit of Coeur d'Alene. And there was one more. But, 4 seniors and 1 or 2 little aggressive silvers, that's probably not the smartest thing, but it was very small stuff. It was just on general principles. So I bought this, although I'm fully aware that we can go much lower. But I've got a lot of sidelines cash, and that's what it's for. It's for moments like this. Remember, it's hard to buy the dip. It should be hard. You should be buying when there's blood in the streets, and there isn't that much blood. There could be more, but there you go. I made a decision today to nibble on some seniors. Let's leave it there. Let's see what happens tomorrow. dollar yields market miners. That's really what I'm looking at, and obviously gold and silver. Bitcoin, nothing to say here. Red day, it's kind of interesting that it's not following the markets too much lower, but I don't think the crash has really begun yet. I think the SEC decided to hold its ETFs until 2024. I don't care about the news anymore. Let's just look at the charts. I think Bitcoin, ignore it until it really closes below 28,500 or closes probably above this 30,000. There you go. Close above 30,000 or below 20,500. Otherwise, have a very good day. Tell me what you think. Tell me what dollar yields market or any other miners you're looking at. But I think the miners, notable stuff underperformed, but maybe it was just that gap fill and GDXJ just going back down to meet basically what gold's doing, which is testing the 1900 low from before. All right, good luck.